Hello, everyone. We'll get started shortly. We'll get started shortly. Guys, as you come in, put your name in the chat and how much experience you have trading. Okay, so if you would, as you come into the webinar, just enter your name, if you would, in the chat for me, please. You can also enter where you're from, and then how much experience you have trading, and what are some of the, as new traders, what are some of the things you want to learn about, all right, as far as trading. Okay, we'll get started shortly. Welcome. All right, let's go ahead and get started. As folks come in, they'll catch up. All right, so if you're here for the first time, my name is David Stephenson. I've been trading for over 25 years, and about 2010, about 13 years ago, started this company we have now, which is called Monster Trading Systems. Hey, Daryl. Welcome, Daryl. No experience. All right, you need to learn. All right, you're in the right place. Welcome. All right, so no experience. All right, welcome. All right. Right. It's good that you get in there, right? You're trying to get the right information before you start trading. So that's the idea with the webinar, to get you some good tools, get you some good information, some good knowledge to get started in your trading career, whether you guys decide to trade or not, right? You're in the right place, right? Trading is not for everyone, right? It takes a lot of discipline, a lot of hard work, but certainly very rewarding. And you guys can do it if you put in the work. All right. So again, our company is Monster Trading Systems, and our tagline here is "Fire Your Broker." If you see it here, "Fire Your Broker." All right. So the goal is to kind of take control of your own trading. All right. Manage your own money. But we provide the right tools, education, and also coaching. All right. So we do one-on-one coaching with me also. All right. And we also provide, like the name says here, Monster Trading Systems. We provide trading systems, right? Automated trading systems to help traders kind of manage their trading process. All right. So get a chance, go to the website, monstertradingsystems.com. .com is our website. We have a lot of traders on there, students on there also that have done really well with us. A lot of great testimonials and success stories. Okay, so don't do that now. When you guys get a chance, you can do that. Okay. Some resources. So that's me here. So some resources you guys will need. All right, as you get into trading. First resource I'm going to recommend is this book. All right, and if you guys go on the website, you guys will see that we highly recommend trading books. All right, a lot of trading resources, but books in particular will certainly help you as you start trading. It's great as a trader to learn from other traders, right? And other experts that are out there in the field. One book that we highly recommend, all right, is Trading in the Zone by Mark Douglas. All right. So Daryl, right? Trading in the Zone by Mark Douglas. You get a chance, you guys get a chance, you can go on YouTube, type the name in, Trading in the Zone by Mark Douglas. All right, there's actually a free audio book. All right, free audio book on YouTube. You can start listening, getting that information, all right, after the webinar. All right, so Trading in the Zone by Mark Douglas. How to master the market with confidence, discipline, and a winning attitude. All right. Perhaps the best, well, there are many books out there, but perhaps one of the best books out there on mindset, understanding how trading works. All right. Very good for new traders, right? We believe in this book so much that we offer this book to our new coaching students. So when we do one-on-one coaching with our coaching students, we give them this book here free of charge, Trading in the Zone. All right, but don't go out and buy the book. You can listen to it free of charge on YouTube. All right, so you're serious about trading, go online, start listening to Trading in the Zone by Mark Douglas. All right, best information you'll get on trading, and you'll start to understand how trading works. Okay, we have a few more resources here that we provide. You guys can also get that information. The Ultimate Guide to Swing Trading. All right, the Ultimate Trading Management, Risk Management, and then Technical Analysis. All right, so swing trading, right? Swing trading is way we're going to stay in that trade, not day trading where we trade intraday. Swing trading is we're going to hold that trade overnight, a few days. All right, so there's three types of trading: day trading, or intraday trading, or scalping. Swing trading, which lasts a few days, few weeks. Day trading, intraday, so buy and sell within that day. And then position trading, which is on a daily time frame. Swing trading is on a 60-minute or hourly time frame, all right, or 240. All right, day trading, intraday, smaller time frame, so 1 minute, 5 minutes, 15 minutes. All right, risk management. All right, and we're going to talk about risk management, but we're going to go through how we trade and manage risk. All right, so trading is all about managing risk. All right, we want to reduce our risk, maximize our potential. All right, so minimize risk, reduce everything we do as a trader. Right, even the knowledge you guys are getting here is to reduce your risk in the market. All right, and then maximize our earning potential. All right, so risk management. All right, many things. There are many things we can do. All right, to mitigate risk. All right, when we trade. All right. Not just about capital and how much capital we put on, how much risk we put on, but also how we set up our trading. All right, how we enter and how we exit the trade. As new traders, that's normally the first thing traders ask: hey, David, where do I enter? When do I enter? And where do I exit? Where do I get out? All right. And when do I get out? All right. So with our entries and exits, we can also manage risk. All right. Manage risk. So not always how much we trade. All right. But how we trade also. All right. And then technical analysis. Right. Um, we'll talk about technical analysis, not fundamental analysis, right? So we're not looking at any reports, any data that's out there, any fundamentals like earnings, right? Any of that stuff, all right? Um, Jobs reports, as an example, interest rates. We look at the price action, the candles, let's say, all right? And we analyze that, all right? All right. Now, these guides, we also, with our coaching, you get access to those. All right. Now, I mentioned this is the first questions usually traders have, new traders have. David, where do we buy? Where do we sell? All right. Where do we buy and where do we sell? Where do we enter? And then where do we exit? All right. So you guys should have the slides right in the chat. You can download it, right? There's several that are listed there. The first one is support and resistance. All right, support and resistance. So I always tell traders, go ahead and download those. When you get a chance, print it. All right, so that you have access to it all the time. And then have it laminated. All right, so that it's not ruined, right? You have it through the years. All right. So download it, print it, have it laminated if you're serious. So you have it. I tell traders just put it in your a small area, right? Your an area where you have your setup, right? Your trading setup. If you guys go on the website, you'll see right on our homepage, right? Traders, right? Traders with their trading systems, their workspaces. Okay. All right. So support and resistance. Let's talk about this. All right. So support and resistance, the keys to your success. Right. So I know some of you probably have heard of support and resistance. If you've heard about it, right, we should think about it a little differently. Everyone, when I talk to traders, when they say they've heard about support and resistance, they talk about buying at support and selling at resistance. Buying at support and selling at resistance. Well, I'm going to teach you guys just a different way of doing it. Now, you can certainly buy at support and sell at resistance, and that's a range trade. So write that down. All right, a range trade. All right, and then just remember again, support and resistance, the keys to your success. Everything you do as a trader, all your buying and all your selling will come through support and resistance. All right. So remember that all your decisions that we will make, all the decisions that we will make as far as entering and exiting the trade will come right here at support and resistance. All right. The way resistance is made and support is made, think of this line here as your price. All right, as your price, and the price made a high right here. I don't know if you guys can see my cursor here. If not, let me know. All right, so price made a high, right? If it comes back and makes a high, let's do this here. So just keep that in mind, support and resistance here, right? We're gonna do this here to help illustrate this. All right, so you have resistance here and support here. All right, so you have two lines, resistance, and then you have support down here. So if the price moves higher and makes a stops, let's say that's $100 here. Now, and I want to spend some time on support and resistance, okay? All right, because this is, again, this is where all your buying and selling will happen. All right, so $100 here, the price gets to that $100 mark, that's not resistance, that's just a high. All right, if the sellers push that price lower, all right, now we have support here. All right, now if we have a minimum of 2 touches, that's support down here. Right, if the price goes back up, right, to that $100 mark, right, a second time, now we have what we call resistance. All right, price comes back down, hits that support line down here. Let's change the color here. All right, so that's $50 here. Let's say that's our support line right here, that red line. All right, so every time that price comes back down to that $50 mark, we have support. One time is not support. Okay, it needs to touch that area a minimum of twice. Now we've got support. The more times it touches, like here, all right, now we have stronger support. Okay, now let's say the price goes back up here, now to $100. Now we have stronger resistance. Price comes back down to support. All right, now we've got stronger support down here. All right, you guys see that? All right, and think of support as your floor, right? So where you are right now, it's at home, right? Your floor, that is support. So what's happening, the buyers are keeping the price above 50. They're not letting that price fall, all right, below $50. All right, same thing here. Price moves back up. All right, the sellers are sitting here at resistance, holding the price. The more times, and start looking at price charts and start looking to find where the support and resistance are. All right, and I'll give you guys some real live examples on support and resistance and why it is so critical. All right, every one of our really successful traders, all right, mastered support and resistance. All right, they have mastered support and resistance. So as new traders, if you guys learn this right away, you learn it quickly, all right, you build this into your trading plan, right, you'll have success. Okay, all right, so just remember, the first time the price moves up is not resistance, right? We need a minimum of 2 touches. So here's the first touch, second, third, fourth, fifth. And just remember, the more touches we have at that $100 mark, right, the stronger the resistance, the stronger the ceiling, right, the more difficult it is for the price to move higher. Now, what's causing all of this? What's causing all of this? All right, what's causing all of this? Well, just remember, right, there are always buyers and sellers. All right, so what's causing all this? Buyers and sellers. So the buyers are looking to push the price higher, sellers are looking to push the price lower. Think of this in area here as an area of indecision. All right, so write that down, please. An area of indecision. That's why we don't like this type of trading here. All right, because no one is in control. The buyers are not in control, and neither are the sellers in control. All right, so the buyers are not in control. All right, and the sellers are not in control. All right, so this area here is called consolidation. So write that down, please. This area in here where there's a battle between buyers and sellers is called consolidation. So the price is consolidating. Or accumulation, price is accumulating. Or distribution, price is being distributed. Okay. Daryl, you can't see the screen? Okay, hold on. All right, you can see the screen here? All right. All right, so let me clear this then. We'll go back. All right, we'll go back here if you can, you guys can see it. Okay. So just remember, buyers are sitting here. Let me know if you can see this screen here now, support and resistance. Just know there's a battle between buyers and sellers. Okay. Let's do this. All right. Hey, Daryl, can you see the screen here now? It says Monster Yen. Let me know. Let me know if you can see that screen. Just put in yes or no. Monster Yen. And then we'll continue. I want to make sure you guys can see the screen. All right. Monster Yen. All right. I'll go ahead and get started. Just let me know. Okay. So we'll look at some real live examples here. All right. So this is a price chart. Okay, awesome. Thanks, Darren. Awesome. So this is a price chart here. So we'll take a so let's find a clean chart. All right. All right. So support and resistance, okay? Support and resistance. Remember the two lines, right? Resistance here, support here. All right? The price broke resistance. Whenever the price breaks resistance, we are going to buy. All right? So whenever the price breaks resistance, we are going to buy. When the price breaks support, we are going to exit, close the trade. Okay? So write this down. We're going to buy. Again, this is the number one new question new traders have. David, when do we buy? And then when do we sell? So write this down. We're always going to buy when the price breaks resistance because the buyers are in control. We're going to buy when the price breaks resistance because the buyers are in control. All right. We're going to sell when the price breaks support because the sellers are now in control. So we don't buy when we want to buy or sell when we decide to sell. Okay, we're only going to buy, enter the trade when the buyers are in control. And who are the buyers? So the buyers are hedge funds, big hedge funds, big institutions, big money managers. Those are the buyers, guys. As retail traders, which is what we are retail traders, individual traders. We can't compete with the hedge funds. We can't compete with the big institutions. We can't move the price. All right. We can't move that price from $50 to $100. There's just not enough of us to move the price. Right. So big hedge funds, big institutions, right, that manage a lot of capital, they move the price. So our job is to piggyback on their trade, right? So we need to follow what they do. And the only way we can do that is through what we call price action, the candles here. Okay, so here is resistance, here is support. Now, support and resistance is so critical that we put it in our systems here that's been drawn automatically for us. So these purple lines, these yellow lines are support and resistance. All right. Otherwise, you have to draw this in manually. So you're always going to have to manually draw in your support and resistance lines. So you want a minimum of 2 touches, like right here, right? Here's a candle here that had a touch right here. All right. That's resistance. 2 touches here, that's support. Same thing here, same thing here, always moving. So your job as traders, and in particular new traders, right? You always have to draw your support and resistance lines. And the reason is we need to find out, right, when the big buyers, the institutions are getting in, and then when they're getting out. The only way to know that is through support and resistance. All right, so we want to buy on a break of resistance and sell on a break of support. Buy on a break of resistance because the buyers are in control. Sell on a break of resistance, a break of support, because the sellers are in control. All right, so think of these red candles here are sellers. So there are red candles here, sellers, right? Prices going down, they're selling, exiting, closing the trades, or they're shorting it. Green candles, right? Green candles, buyers are in control. Buyers are in control. Okay, so red candles, sellers, green candles, buyers. All right, yellow lines here, that's your resistance line. The ones at the top, that's your support line at the bottom. All right, purple support and resistance means the price, you have purple support and resistance, what we call this the markdown phase. So you guys should have a slide, another slide that says that's called the 4 market phases that every trader must know. We have the markdown phase, markup phase, accumulation, which is right here, accumulation, distribution, which is at the top. All right. Within the markup phase, we have reaccumulation. And then within the markdown phase, we have redistribution. Okay. But for right now, let's focus on the markdown phase. Okay. And then accumulation, and then the markup phase where we would enter. So during the markdown phase, price is moving lower, red candles, sellers are in control. We don't do anything. Okay. We don't do anything. So I'm going to come back to this because I might be a little ahead there. All right. So you guys should see, hold on one second. Okay, hold on. I'm getting a little ahead of myself here. So just remember, all right, support and resistance right here. So you guys have that, right? So resistance and support, we're going to buy on a break of resistance because the buyers are in control. We're going to sell when the price breaks support because the sellers are in control. We do not trade between, now you can trade it, you can trade between support and resistance. All right, we call that a range trade, but the best opportunities is when the price breaks resistance, buyers are in control. Now, there's also what we call the 4 market phases. Okay, hold on here. So also take a picture of this. And then we'll go back to the trading chart. Okay, so the 4 market phases that every trader must know. All right, the 4 market phases that every trader must know. You guys must know this. All right, as traders, you have to know this. Okay, The first phase is the accumulation phase, which starts at the bottom of your chart. All right. So here is support, here is resistance. When the price breaks resistance, which is now the buyers are in control, okay, that's phase number 2. All right, phase 2. All right, the markup phase. But at resistance here, now the price is moving higher. Within the markup phase is the reaccumulation phase. So we have new buyers entering the market when the price breaks resistance here. All right. At phase 3, the price can't go up any higher. It breaks support, right? And now it's in the markdown phase. So these are your red candles. Just think, right? Red candles, sellers. I would say trading is simple but not easy, right? So you guys, you want to have a process. You need to understand how trading works, okay? And the price goes in a cycle, right? It consolidates or accumulate. It goes up, right? Takes a break. So just think, whenever the price takes a break, it's either consolidating, accumulating, or it's in a distribution phase. That's the price taking a break before, or the buyers and sellers taking a break before they move the price in whichever direction they want the price to move. Price can only move in 3 directions, okay? It can either go up, down, or sideways flat. So anytime you have support and resistance and the price is not like in the markdown phase, like here, or markup phase, it's taking a break. So every time we have support and resistance, think of the price, buyers and sellers taking a break, okay? So accumulation, markup. Within the markup phase, we have reaccumulation, all right? And then we have distribution, markdown phase. Within the markdown phase, we have redistribution, and then it starts all over again with the accumulation phase, okay? So there's only 4 phases that we should know when it comes to trading. And think of this as your roadmap, all right? Only 4 phases. Phase 1, accumulation. Phase 2, markup. And we go through this with our coaching, right? When we do one-on-one coaching, we go through all of this, right? So you guys understand this, learn this to memory, all right? 1, accumulation. 2, the markup phase. 3, distribution. 4, the markdown phase. Then it starts all over again with the accumulation phase. So if you're aware of these phases, you'll know when to be out. All right. You'll know when to start buying in the markup phase. You know when you should get out here when the price breaks support. All right. And you should know when to be out of the market, waiting again for buyers to come in to then buy. All right. So think of this as your roadmap. All right. The 4 market phases that every trader must know. This is your roadmap. All right. So now let's go back live to the chart here. All right. So now follow me. All right. So we're back live in the chart. This is your markdown phase. All right. This is the markdown phase. All right. Your markup phase. So we should be out of the markets here while the price is moving lower. Most traders, as the price is moving lower, they're still in the market, holding on, right? Hoping that it will at some point go back up. All right. So what we want to do is we want to get out here. All right. Get out, wait. All right. When buyers come back in, like right here, right, we'll now get in and buy again. All right. All right. Let's find another one here. Horrible chart. That's a horrible chart there. All right. So accumulation phase, markup, buy signal was hit. The price broke resistance. See what happens when the price breaks support? Broke support right here. We had a signal here to exit the trade. And here's now the price moving lower. All right. That's the markdown phase. We should be out of the trade. All right. So we would have bought here, gotten out here, taken the profits. All right. and then we would be out of the trade. We had another buy signal here. The price broke support and we got out here. So we bought here, got out here, took a small loss. But guess what? We're not in it during the markdown phase. All right. So that we have, if we do that, we'll have a larger loss. All right. So what we want in trading is we want small losses, guys, big wins. Small losses, big wins. And the way we're able to manage that process is through support and resistance. All right. Is through support and resistance. Here is another trade here. Here was a buy signal here. It failed. Price broke support right here. Here was our signal here to exit the trade. So yes, we had a loss here, but that's a small loss compared to the loss we had here. So when it gets into that markdown phase, guess what? We need to get out. All right. We need to get out so that we don't have a major loss. All right. But when we get a nice trend, we want to stay in that trend, that upward trend, as long as possible. Okay. Kind of like here. All right. So this is a good example of where we had 2 losing trades and 1 winning trade so far. Now, this one is still open. But if you guys notice here, we bought at resistance, and I know this is new to you guys, so this might look very foreign, all right? But just understand, right? These blue arrows here, and these are systems that we have that will tell us we're going to buy. So these blue arrows says, hey, buy with our algorithms, buy here. If it broke support, which is right here, it broke support, we would sell. All right. So this here, we would take a small loss. And in trading, guys, it's all a game of math, a game of probabilities. Okay. The way we win at trading is by taking small losses. Right. We are constantly testing the market, testing, because no one knows, right, what the markets are going to do. All right. The way we manage our trades is by taking and manage risk, right? We talked about risk management, is by taking small little losses. But when we win, we get a let's call it a big home run, let's say, right? We want to stay in that home run for as long as possible because we need those home runs. We need those big wins, okay, to pay for our small losses. So look at this for a second here. So here was a buy signal here to enter. Green candles, buyers are in control. But guess what? It didn't last long. Sellers came in. Red candle here. Broke support. This is our support line here. We had to get out of the trade. So we took a small loss here. All right. The next trade, second trade here. So that's the first trade, trade 1. Second trade. I'm almost done. I am almost done, guys. I know it's Saturday here. So next trade here, second trade here. We had a buy signal here. Buyers are coming in here. Guess what? Failed. Resistance becomes support. Broke support. We had to get out here. We did not get out here, right? So we bought here, got out here, took a small loss, bought here, got out here. And then the third trade, we waited, let the price go down. All right. That's the accumulation phase, markdown phase here. Waited for buyers to come in, broke resistance. We got in here. This time, guess what? It hasn't broken support. So there's no reason to get out of the trade. So we bought here, and look here, it's still in the trade, going all the way up. Now, so far, this loss right here, although we had 2 losing trades, this winning trade so far more than pays for these 2 losses here. Where most new traders, I would say 99% of new traders don't understand this concept. So we are looking to have a winning trade, 99% winning trade. So every trade we put on as a new trader, we think we're going to win. We need to win. We can't take any losses. All right. And that's not trading. Most of the trades that we're going to take All right, a large percentage, 60, 70% of the trades we take will be losing trades. The way we win at trading is to manage those losing trades, right? Take small losses. All right. Don't get out here. Don't buy here and get out here. Buy here. If it's wrong, get out here. Buy here. If it's wrong, get out here. And then, right, if the trade works out, we want maximum profit, right? We need to let that trade run so that we can now pay for these losing trades here. That's all it is, a game of math. Not understanding the four market phases, not understanding support and resistance, not understanding risk management, that we need to get out quickly when we're wrong, right? But almost as important, or just as important, is that when we're right, we need to stay in the trade as long as possible. Okay? All right. So I hope this helped. This is now we went a bit advanced, right? Getting into the actual charting here. As a new trader, this might all be foreign, but this is what we do. We do this all day long, right? Every day. When we trade, right, we follow where the buyers, right? Where the buyers are they setting up to buy? So we're going to buy also and stay with them as long as they're buying. Where the sellers sitting? Sellers are sitting at support. So if we drew a support line here, you guys will see here. Here's support here. All right. Here is resistance. Here's resistance up here. Here is support down here, and then here is resistance right here. All right. So understanding support and resistance, the four market phases, is critical. But for brand new traders, right? Brand new traders, you want to make sure that you guys get the right information. All right. You want to get the right information. Let's do this here. All right. And it all starts with trading in the zone. Okay. So it all starts with trading in the zone. All right. All right. So that's all I've got. All right. Let's see here. This is where we want to start. Right here. All right. Trading in the zone. If you guys are serious, like I said, you don't have to go out and buy the book. You can go on YouTube. All right. Go on YouTube, type it in, trading in the zone, start listening to this. All right. Once you do that, right, some of this information we've gone through today will make more sense. All right. And you just building, right? As you're brand new, think of this as, like any other job or career that you've done, right? It took a process, took some time. All right. First step right here. First step right here. Okay. Also coaching, right? I do coaching. Think of trading like any other business. I like to equate trading to a sport, right? To any type of sport where you do coaching, right? Any of the professional athletes, right? They need a coach. So that's what I do. I work with traders. I work with new traders. I work with always existing traders, right? Where they might have been stuck at a certain number of income, all right, that they're making. And it's my job to get them to a higher level, right? To break their own personal resistance, right, in their trading. Okay, so trading is it's very difficult, but you can do it. You guys can do it, but it takes some work. It takes some knowledge, right? Takes some coaching, takes some tools, all right, to do it the right way. It took me about 10 years before I kind of figured this thing out. It took me a long time, all right? The good thing about trading now is we have a lot of resources. When I started, we didn't even have the internet, right? This was back in the mid 80s, right? When we didn't have a lot of the tools that we have now. Okay, so I'm glad you guys are on here. Glad you're getting this information. Okay, my information is in the chat. So if you guys need anything at all right, my phone number, email, the website. I recommend going on the website. All right, look at. It's important to listen to, read about other traders. All right, that's trading, that are trading, having success or having struggles. All right, so you can get an idea what's ahead. All right, thanks for coming, guys. Thanks for coming. All right, keep coming. On this class we do on the webinar, we do evening classes. I do evening market analysis every Sunday through Thursday. We do the webinars on Saturdays. And I also meet with our traders on Fridays. We do a roundtable. Okay. And what I always hear from traders that, wow, David, I picked up something different. All right. I pick up something that's different every single time. All right. So a lot of the information is repetitive. Okay, but we say it, we use it in a different way because everyone gets the information differently. Okay, trading is like I said, it's simple, it's not easy. It is rewarding though. Those of us who have figured it out, it's very rewarding. And surprisingly, it's not always monetary. All right, there's so many other rewards that comes from trading, which is not always money. All right. Thanks, guys. All right. I'll see you in the next webinar. Thanks for coming. All right. Take care. Bye-bye.